Hello everyone. Before we begin, I'd like to clarify that this video is not investment advice or a professional financial recommendation. This content is for reference purposes only, and is based on Vedic astrology, also known as Jyotish, an ancient Indian astrological system, used here to analyze the trading flow and market fortune of XRP for February. Any investment decisions should be made based on your own judgment and responsibility. Please use this video simply as a guide for understanding market timing and overall flow. There's one important thing I'd like to explain before we start. When I refer to week 1, week 2, and so on in this video, these are not calendar-based weeks. Instead, the weeks are divided based on shifts in market energy and momentum. In real trading, what matters more than whether it's Monday or Sunday is whether the character of the market has changed. So today's analysis is structured around those market phase transitions, and I'll explain everything using that framework. Now, let's begin. If I had to summarize February's overall XRP market energy in one sentence, it would be this: a month that shakes hard first, and reveals direction later. February does not start with a clear trend. Instead, the market continuously confuses participants, creates strong swings in both directions, and only later settles into a clearer direction. That's why February tends to reward those who are patient, rather than those who trade impulsively. Let's start with the early February phase. From around February 1st to the 4th, the market struggles to find direction. Price movements may look convincing on the chart, but trends often fail to follow through. This is a phase where both long and short positions can easily get shaken out if you're not careful. The biggest mistake here is chasing price movement. Especially between February 3rd and 4th, even if the 4-hour chart looks strong, the 2-hour chart can show violent whipsaws in both directions, so caution is essential. The next phase runs roughly from February 5th to the 11th. During this period, the market begins to act as if a real direction is forming. However, the key point is this: the probability of a false breakout is higher than that of a real one. Instead of entering immediately on a breakout, it's much safer to wait and see whether price pulls back and finds support or resistance confirmation. February 7th and 9th are particularly risky days. On these dates, relying solely on the 4-hour chart can be dangerous, so if you enter a trade, you should have a clearly defined stop loss based on the 2-hour chart. Now we come to the most important phase of the month. From approximately February 12th to the 18th, this is the highest volatility period in all of February. Sharp drops can be followed by sudden rebounds, or strong rallies can reverse just as quickly. Price action during this phase can feel aggressive and unpredictable. February 13th and 16th stand out as the most dangerous days of the month. These are the days when you might think, there's no way the market moves like this, and then it actually does. This phase offers the greatest profit potential, but also the highest risk. If stop losses are ignored, your account can take serious damage. During this period, it's strongly recommended to reduce leverage and manage trades using 2-hour chart confirmations. After that, from around February 19th to the 25th, the market begins to stabilize. The chaos from earlier phases starts to resolve, and one dominant direction gradually becomes clearer. Positions entered during this phase are generally more comfortable to hold, and trend-following strategies become more effective. February 20th and 22nd are particularly favorable days, with higher trend reliability and better conditions for maintaining swing positions. At this stage, counter-trend trades tend to be less effective. Following the confirmed direction is usually the better choice. Toward the end of the month, after February 26th, market energy begins to fade. Most major moves are already behind us, and profit-taking and consolidation become more common. This is not an ideal time to open aggressive new positions. Instead, it's better to reduce exposure or focus on closing existing trades. Let's summarize. The most important principles for trading XRP in February are: don't commit to a single direction too early. Avoid chasing breakouts. Use the 4-hour chart as your main reference, but always switch to the 2-hour chart during high-risk periods. Above all, February rewards patience. This is not a month for fast reactions, but a month where waiting for clarity becomes your strongest weapon. I hope this analysis helps you prepare for trading XRP in February. In upcoming videos, We'll dive deeper into specific entry and exit scenarios, as well as survival strategies for managing both long and short positions simultaneously. Thank you for watching, and I'll see you in the next one.